This is Jason. This is the Patriot Radio News Hour. I'm joined with Brian. Joe has the day off, has some business to attend to. This is why myself and Brian are here. This is why Joe is here. When we need a day off, we need someone to back us up. Joe does it, and today Joe needs the backup. So I'm here, and Brian is doing a check here. Are you on and ready?
I'm on and ready.
Okay, good. All right, we got the Colorado team all set to go here. This is the Patriot Radio News Hour. This is the show that is based out of Arizona but has been playing in Colorado for decades, just like the Arizona show. The number to call for gold and silver is 800-951-0592. Brian, I'll have you bring in the rest of the breaks. I didn't get that message to you before. Just let's do it the way we do it. In case you don't go to 1360khnc.com and stream in 1360 KHNC, the radio station in Colorado, in case you don't listen to Faking the Truth in the afternoon at 3 o'clock Colorado time, we are the guys that handle the afternoon show here for the Patriot Trading News Hour, the Patriot Trading Group Gold and Silver Company, and we've been doing it coming up on 4 years, and we like what we do, and the radio station, Brian, just kind of came along with it, and we just whatever hits us, we just go with it, right?
That's how it tends to flow. Yep, good to be with everybody. 7th of February, 2022, January in the rearview mirror, that's for sure. It sounds like we got some interesting topics to cover today, Jason.
Yeah, we're going to have a good gold special, so if you want to jump in early, just call the number. The girls over in Arizona are ready to take your orders, 800-951-0592. I said a few times on the Patriot Radio News Hour that I'm not a big chart guy, but there are charts that make a lot of sense, and there's this one I've been watching. The guy that I've been watching, his name is Joe Brown. He's a newer podcaster. And he's been doing it just since 2019. He's actually been doing this less years than Brian and myself. But there's a couple of guys I like. I like a lot of guys. Joe likes a lot of guys. It's just who's making sense. I liked Glenn Beck years ago, and then after 2016, Glenn Beck was falling apart. Now Glenn Beck's getting better. You get the information as best you can.
Seem to be back, yeah.
Yeah. You just got to find good information. So there are some younger guys. I guess you can call them younger. And I got clips, I think, at least 2 clips, maybe 3 clips in the next few segments I'm going to play. And you won't be able to see the chart, but we're going to talk about this gold chart that I've been looking at closely. When gold dropped a week ago or so, it stayed inside this chart again. Higher lows as we have a little bit lower highs, because the high of gold was August of 2020. That's when it hit its all-time record high. Kind of spiked a little high, and then it came back. And all through 2021, it kind of went sideways. And we've been watching this action. And in this chart, it's going to break out. And everyone knows that has been watching what's going on. It's like the whole world of people that watch economics, they're waiting for the big market crash or whatever the stress on the market's going to be, and who knows what's going to accompany that, if there's going to be a false flag operation or more COVID or whatever it is. There's going to be a lot of distractions in the news. So we're going to play Joe Brown talking about gold's doing exactly what it's supposed to. And then another segment or two after that, I'm going to play another piece from Michael, and he's going to talk about, stock markets, just keep buying it. And if it goes down, price it in, buy it. Because after we have this little hiccup in the markets, because a lot of stock market guys are saying it's going to go down too, even the bulls. And then, you just keep buying it because it'll bounce back. What are you going to do? Sell all your stocks? You don't know when it's going to go down, when it's going to go up. You just just like we do with gold. Hey, buy the dips. If it goes down a little bit, here's a buying opportunity. Well, these guys are saying, there'll be some stress, but it'll come right back. Well, we're gonna give you some information about the S&P 500 and a couple of times in history where, Brian, it didn't come back for 25 years. How do you like to wait 25 years for your S&P 500 to come back, Brian?
Wow.
So,
nothing like, I guess that answers the people's prayer that we're praying for patience. I mean, talk about a way to teach somebody patience, wait for it to come back that long.
Correct, and that's why I've said before, Brian, when I meet with the customers here in Colorado, the gold and silver buyers at Patriot are the most relaxed people I have ever met. Gold goes down like it did after 2011. It just came down, and by 2015, it was even getting almost into the 1,050 range. It was kind of 1,100, 1,200. And then after 2015, it just kind of went sideways for 5 years. These gold and silver buyers treat it the way it's supposed to be treated, as safe savings and pure wealth insurance. And they didn't worry about that because, they didn't buy it in 2011 to sell it in 2012. If you're wanting to buy gold and sell it like some sort of a quick in and out stock, go risk somewhere else. It's just better to risk somewhere else. It's
that's what the Vegas stock market's for, Jason.
Yeah, well, that's what investing, and with investing there's risk. With savings, you're kept whole. Gold and silver is savings. You're kept whole. Gold can go down a little bit, but if you look at it on a long enough timeline, because I can't wait to play these clips because I can say it, and Joe's been saying it. It's always good to hear us. You come to the shows to hear us talk, especially Joe and then Eric before him. But sometimes it's good just to have a fresh sounding voice that comes in as like, look, here's a way to say it that makes a lot of sense. Because I can say it, Brian, and you can say it for the 4 years we've been doing it. But sometimes our communication skills don't get to everybody. Sometimes you have people listening, and the way they think is a little different than you, Brian, or me. And it doesn't quite get to them. So I love to bring in these other guys because they may say it in a way that's like, holy cow, that makes so much sense to me. And then you're going to hear that we have this gold special. It's like, hey, this is a great way to get fractional gold at a reasonable price. So you don't have to have $2,100 or $2,050 to get a 1 ounce gold piece. We've got something more fractional, Brian.
Sounds exciting.
We will be right back. Stay tuned. This is the Patriot Radio News Hour. Your guest hosts, Brian and Jason, will return.
Welcome back, Patriot Trading News Hour on this Moon Day morning. Your co-hosts, Jason and Brian here, back filling for the big man, Joe Jaquint. All plans are he'll be back tomorrow. Jason, speaking of all things are fake, I just heard that over the weekend, I don't know if it was Friday, Bloomberg put up for a brief period of time that there was a Russian attack or something had kicked off in the Russian-Ukrainian border area. It turns out that was fake, and they pulled it back down. Interesting.
How much stress can they put us under? What's going to be the thing we need to be afraid of next? And like I said, our gold and silver customers, there's a lot of scary stuff in the news cycle, but
seems like so much of the news, Jason, is to make people with their investments and with their money like a cat in a room full of rocking chairs.
Yeah,
I mean, how much of the news cycle is stuff like this?
You're exactly right. And here's the funny thing, because gold and silver does well with scary news. When scary things are happening, gold does well. Especially when economics news is scary, gold does well. But it is like a nice warm blanket that covers over you. Yeah, it's not going to have dramatic moves, and it's not going to be the talk of the financial channels and make you feel like you just man, I actually struck gold, man. It's look at gold does when gold moves, it is exciting. It's like there's no doubt about it. But if you look at it over a long enough timeline, they have created inflation through a central bank, the Federal Reserve, in 1913, and as the system they put into place gets long in the tooth, it just gets worse and worse and worse. I mean, Joe loved to talk about 1971 when we were taking off the gold standard, but 1913 is what allowed that to happen. 1933, when they confiscated gold and started changing the markets and changing the world into one direction, inflation was going to be put into the cycle. People are going to have to pay more and more and more for things because, hey, those at the top have assets. They love the inflation. It makes you have more wealth. The wealthiest man in the world, on average, will eat the same amount of food as you and me, Brian, but you and I having to pay more money for that food, it causes us more strain than the rich guy whose assets are going up during inflation. They love inflation. They're gonna. I don't know if they want this kind of inflation, how bad it is now, but they, because it scares people and wakes them up. They don't want to wake up the sheep, right? They don't want to wake up the people that are asleep. But this is what they do, Brian. They want you to be fearful of the news cycle, and they want you to do what they want you to do. They have a system in place, and gold and silver is just not a part of that, Brian. But gold and silver buyers we don't really worry about that too much, do we?
Nope, like you said, it's an amazing thing to see how much a peace of mind are held by the people that are converting their dollars into gold and or silver. It's amazing to see that.
So the other thing then that people have, which say are people that have bought some, or people that are listening that haven't bought gold. Well, I don't want to buy gold because I'm going to buy that gold piece at $2,075, and then of course it's going to go down $200. It may not go to zero because gold's, if you're kind of stupid if you think gold's going to zero, it won't happen. But they think, the average person, like, man, well, it'll go down to $1,800. So pretty soon you'll be selling these for $1,800. I'll have lost $200 in that coin. Gold has done jumps of that much before, but it's short-lived generally. And let me say this. You look at the timeline of gold versus any other asset class, and gold is just doing just as good as almost all of them, or better than almost all of them. So a lot of people are like, well, I don't want to buy it, and then it goes down. Well, you could buy stock. You could buy the S&P 500. You could buy all these other things, Brian, and they can go down. Gold will always go up as long as everything else goes up. So the thing I tell Brian that are new people that are listening, do you really think the next new car you buy is going to be cheaper? Do you think 5 years from now the food you buy and the bills, the energy bills you pay on your house is going down? And when people tell me, and they always tell me, yeah, these things are going to get more expensive as time goes on, even if you don't have the big inflation we've had last year and this year, over time that stuff goes up. That is gold. Gold is equal to those things. Federal Reserve notes is a whole different thing, Brian. That's not an inflationary thing as far as it goes up because there's inflation. The value of dollars go down because they print too many, Brian.
Well, I think from what I've seen, gold and silver at different rates, different paces, they keep pace with that. And it's, our brains have been too often taught in reverse order. Why is gold so expensive, or why is silver so expensive? No matter what the price is, when it's in actuality, it's reflecting the purchasing power of the dollar, or lack thereof, the purchasing power of the paper dollar.
Exactly. So I'm going to play, Brian's exactly right. So I'm going to play a video that hopefully will, for you guys that have been buying for a long time, trying to figure out when you're going to buy, or you're trying to convince somebody else that this is a great time to buy. Brian and I came on in 2018, 2019. We said, this is the good old days. That year, 18, and the beginning of 19, we said, this is the good old days. This is when you buy. We were selling $20 gold pieces for $1,250 to $1,350. That was the range. It was generally around $1,250 to $1,300. And right now, in 2021, up into 2022, we don't sell these for less than, I think we had a really good sale last week at one point for $20.50 on these coins. That's $800 more. And what's getting ready to happen, gold is going to blast way past that very soon. So this is your time to buy. So I'm going to play this. This is from Joe Brown. He's going to tell you about this chart. Now, you can't see the charts, so bear with him when he's talking about it. But let's just pretend there's a line on a chart, and it has the highs of gold in 2020 when it hit over $2,000 an ounce. It broke it into its new high. The line comes down as gold went down and it kind of bounced off that high, and it was a little overpriced at that moment. It goes down, and you will see that in this chart, which you can't see on the air, you'll see that the highs, when gold kind of goes up in the last year and a half, it sort of touches that line and goes back down. And then there's a line from about 2019, okay, when they were unwinding, and they were taking taking assets off the books of the Fed. Taper had been ending, just like what we're getting ready to hit now. You hit the line, and the line goes up. You'll notice that in 2021, every time gold went down, it touches this line and pops right back up. Then it hits the line above, comes back down. Well, these two lines are converging. At the point where these two lines are converging, gold will break out. And that means it will go above the previous high. And it's very likely to go to $3,000. And if the emergency in the news cycle is severe, it can just keep on going. So let's play this clip, Brian, and you can react to it. These lines are going to converge by May, which means that any day now, gold can break out. It doesn't have to wait till May. It could happen in February, March, or April. And I think April is the most likely time for it to break out, but it could happen here in February, depending on what happens in the news cycle. So, Jack, go ahead and play Joe Brown.
Right now, gold is performing exactly as I would expect it to, given everything that's going on right now, given interest rates, given the Federal Reserve saying that they're going to be tapering their balance sheet, stopping their asset purchases in March, raising rates, what that's doing to real interest rates, given the current inflation rate, and given the inflows into ETFs like GLD and what that's doing to COMEX vault inventory. I'm not surprised one bit at the price of gold right now, the price action of gold, and what it looks like it's going to do in the coming near future. Ready? Let's dive in. Alright, first take a look with me here at this chart of gold. And you can see here, I've got this triangle drawn. You can see the last time I made a video about gold, it had just broken above 1830 right here, and it had sustained. And I was saying, hey look, this is a good sign. 1830 is a long-term resistance line here. It's had trouble getting above, so if it sustains above this line, that's a very good sign. But I said, I anticipate that it comes up, hits this declining trend line here, and then falls back down. What did it do? Exactly that. Right on cue when the Federal Reserve came out with their press conference after their last meeting, gold started to fall, just like you'd expect, and guess where it landed before it rebounded? The bottom ascending trend line hit just like clockwork and bounced right back up. Now keep in mind, we are closing in here. If it goes all the way to the end, we've probably got just about another month here, maybe a little bit longer, of consolidation sideways before this thing breaks out one way or another. If we zoom out a little bit, we can see that the long-term trend here, we're showing a giant bull flag, and as many, probably like 1,000 of you pointed out in the comments section of the last video I did on gold, you zoom out even further and you see a massive, giant cup and handle. Now, are some people saying gold is dead? Yes. Are some people saying it's just a rock that does nothing over time? We're still below the all-time highs. Well, yeah, of course. We had a bubble in 2011. Of course, you're going to be a little bit below that. When in doubt, zoom out. Gold has outperformed the S&P 500 since 2000. Gold has matched the performance of the S&P 500 since we left the gold standard in 1971. Am I cherry picking dates there? Of course. But if you're gonna say that gold is dead, you gotta say the same thing about the S&P 500, at least during specific long-term time horizons. So that's a small technical update. We're gonna look at two updates on the fundamentals that are driving the price of gold. Number one, we're going to be looking at what the Federal Reserve is doing. The price of gold anticipates inflation. It moves with the anticipation of monetary policy. Unlike other commodities like copper, it's not going to move with inflation, participating in that price rise. It's going to move ahead of that because it's a monetary metal. That's why the price of gold skyrocketed after the decision made by the Federal Reserve to basically bail out the entire economy, because it knew all of that money printing, those trillions of dollars coming into existence, would eventually bid up prices. Did it bid up prices right away? No. But gold sniffed it out and ran it massively. It overshot into August and then had to correct, and it's been moving sideways since because it's been anticipating the taper. It's been moving sideways and downward since then in anticipation of the Federal Reserve tightening, tapering its balance sheet, or at least tapering its purchases, raising rates. And now, really since last August of 2021 until now, gold has been moving steadily, little by little, higher and higher, making higher lows in anticipation of the tightening failing, causing a crash, and the next round of easing to start, in which case we're going to see another giant move up in anticipation of the future inflation that money printing will cause. Now let's move over to inventories. If we take a look at COMEX inventories in the vault, we can see that registered gold remains at the lowest level since November 30th of 2020 here. That red line, we've just recently seen a drop in vaulted gold. It lost about 443,000 ounces. This is the biggest drawdown in inventory since October 20th of 2021. This big drop right here. These charts and updates are put together by MikeSay98 on Twitter. Go ahead and give him a follow if you are on Twitter. In summary, there's nothing going on with the price of gold that should be a surprise to any investors. It's moving along right as expected. Both the technicals and the fundamentals are extremely solid right now, meaning that anytime now investors who are patient should be handsomely rewarded. But don't take my word for it. I'm just some guy on the internet, and this shiny yellow rock could start raining from the sky and land in everybody's everybody's backyards, pushing the supply and demand equilibrium to render the price of gold at zero. Wouldn't that be something? As always, really appreciate you guys. Thanks so much for watching. Have a great day.
There you go. So Brian, it's coming to the end of this chart, and he's saying even just a month from now. But he also has said in other videos I've watched, very beginning of May. So end of April might be the end of this chart. So between here now and February, and about a month from now, 2 months from now, it's going to hit the end of this chart, and we already know because he did say, well, it's going to break. It's going to break at that point. We know with breaking can break up, breaking can break down on the chart. It's not breaking down. We know this because the taper will be ended in March. We know interest rates will be being pushed. We know that they're going to try to sell off the balance sheets. I'm talking about the Federal Reserve. All of these things are going to break the stock market. There will be some sort of adjustment in the stock market, and then everyone's going to be like, no, buy more assets, Fed, save us. And gold will just launch. Stay tuned. We got our gold special. Brian's going to bring it in. We're going to talk about $5 liberties. 800-951-0592.
Welcome back. Second half Patriot Trading News Hour with your substitute hosts, Jason and Brian, today while the big man Joe is out and about. Jason, a real quick thing here. Fed reversing course will be magic for gold. This spoken by Jesse Felder.
Just in time for that chart I'm talking about. I mean, that's exactly what we're talking about, Brian. It's going to happen. So, man, it's one of those things. And now we're going to cover something else here about there are some guys out there, they like to do gold, and they like to do the markets. And I'm going to play around with some of these paper assets. I don't like paper assets. I don't really like insurance. I feel like I'm always a very efficient guy, Brian. I always tend to cash in on my assets. I don't want to pay someone a bunch of money and not get it. So I feel like if I get life insurance, I'm going to have to cash in on that. I might end up dead. So I don't even like life insurance for the most part. But we're going to talk about
this one, Jason.
Yeah, go ahead.
How about this one real quick? Department of Justice announces investigation in 60 hedge funds for market manipulation. Then a TD Ameritrade Records storage facility burns down in Chicago. Huh. No manipulation, is there? No games.
Isn't that what the mob does when their little controlled restaurant is failing? It's like, well, that restaurant's not making money anymore. It's time to burn it down, collect the insurance, and go grab another restaurant, right?
Boom.
There's a lot of corruption and a lot of manipulation going on. First, let's do the gold special real quick. I got another clip I want to play. We're going to get maybe half of it in after the gold, and we'll hit gold this segment in the next one. But we have $5 liberties. And if you go to the website, allamericangold.com, we have $5 liberties selling today at $5.90. I don't know if Joe adjusted that. Gold is up about $10 at the moment, 18, 17. Silver is doing really good too. Whether Joe adjusted the website or not, I wasn't paying attention with everything I've been involved in. It's a little more work when Joe's not around, but we're going to take these coins below the website price, and we're going to add the bonus. We typically like to sell those circulated, sometimes you'll see them if you bought our coins, the cleaned ones, something they call jewelry grade. They're not ugly, but it doesn't really matter. We're selling the gold weight. 99%, 98% of what we're selling is the gold weight. Some of these other companies, they like to take these and grade them and sell them as collector coins. And once in a while, if we can get them super cheap, we'll sell those graded coins too. But we try to stick to the lowest possible priced gold, which is the circulated grade. Well, we sell those for $590. A $5 quarter-ounce gold Liberty, $590. We're going to sell XFs today, and I have a good amount of these. I think they'll make it to the afternoon shows, but I would not wait because sometimes you get a whale that comes in and just buys the whole thing up. So we have about 200 of these at the moment. I don't know where our distributor sells them to everybody else, just like we sell to everybody else. So when you're coming in on a special, sometimes you have to compete against other companies. So we got about 200 of these at $585, and these are extra fine condition. So these are not clean coins. These are not heavily worn coins. These are, they're not mint state or AU, but they're nice. They've seen better days than the circulated and the clean coins that sometimes you buy at sometimes at a cheaper price. But this is great. We're going to go below the price at the website, and you're going to get XF quality coins. $585. You got to call 800-951-0592. 0592. If you're new and that's a little fast for you, it's 800-951-0592. Fractional gold is a good way for people that don't have $2,000 to get a 1 ounce, $20 Liberty. This is a way for you to get a little fractional gold in your pocket with having spent a lot. If you want a bunch of these, call over there. We've got some supply today, and we'll get you set up. Brian, I'm going to play this clip. I don't know if we'll get the whole thing in. This is Michael, another one of the guys I look at and get some information from. He made a really good point. He looked at, once again, some history of the S&P 500. In 1929, the S&P 500 went down, and I'm just going to let him say it. We may be looking at similar situations where people are like, you know what, I'm just going to keep my stocks because even if it goes down some, look what happened in 2020. It just all came back. Why do I get the feeling that's, in basketball, there's the head fake. You do the head fake and the defender jumps up in the air and then you just take a nice, easy shot. Why do I feel like 2020 was a head fake? Because stocks dropped 40% and then in the same year, bang, came all the way back. Why do I get the feeling that this isn't going to happen this time, Brian? Why do I feel like stocks are going to take a tumble here and maybe we're going to look at history and they don't come back for a long time?
I can't help but think of the movie Money Monster, and I think it's a kind of a little bit of a spoof on Jim Cramer on CNBC. But
yes.
The story behind that movie, I don't care for George Clooney, but it was a decent movie. But he was trying to help the guy that came in and basically was holding him hostage in the TV crew for this money show. And George Clooney says, "I know what we can do. We can get everyone out there to pitch in and buy and get your what you lost in the stock market, get it back." Well, the algorithm was rigged, and so it didn't quite behave that way. It actually dropped.
Yeah, they got it up a little bit, and it looked like it was making a difference, and then boom, on some automatic sell algorithm hit and then destroyed it. We're going to hit the break here in about 2 minutes. I don't want to play. This is about a 4-minute clip I want to play. So I'm going to have Michael invest. He'll come in. I'll put him in early in the next segment, Bryce. So let's not mess around. But I want you to hear, the dates and the long periods of time that and gold. Here's the funny thing: gold doesn't go down since the Federal Reserve Bank has been in place. Because really, we should be spending gold coins. There should be no buying of gold coins. It should be the money. But since the Federal Reserve is here, there has been no, gold is down, and gold is down for 25 years. Hasn't happened. 1913, we're in 2022, we're 109 years later, and the most you ever see gold going down in this cycle is maybe a year or two. When so-called good times are happening and people unload their gold, it just doesn't happen. Gold has either stayed the same or gone up pretty much the entire 109 years. But can't say the same about stocks.
Look at the path that they set for it, Jason, after they stole the gold. They want to use the word confiscated. After they stole the gold, look at the pattern that they set when they jacked it up. How much was it that they set the price for
35.
After they stole it all from
It went immediately to $35 the next year. 1933, they took it. 1934, gold, those $20 gold pieces went from $20 to $35.
Yep.
And there you go. That's exactly what Brian's saying. So $35, and it kind of stayed there for a long time. And then some economic stress started happening because in the 1960s, all of those European nations that loved the World War II heroes, America, they're like, wait a minute, you guys are printing up a lot of these little Federal Reserve notes. When are we going to get our gold back? And this is why Joe hits this so hard, and it's very important. August 15th, 1971, we're suspending that connection to gold to the dollar. But don't worry, everything will be the same as long as Americans buy American. Meanwhile, he's the first president that goes to China and starts setting up industries moving to China and cheapening how much our goods would cost by using China labor. But we're going to come back and talk about, should you be holding on to your stocks right now? Or maybe you should unload a few of those stocks because maybe they're going away in price and not coming back for a while. Gold and silver won't do that. We'll hear this when we get back from the break.
Patriot Trading News Hour with your co-host Jason and Brian on this National Periodic Table Day, and my favorite element, or I should say elements, silver and gold. Jason?
Absolutely cool, man. So, hey, the phone number, $5 Liberties for $5.85. They're XF condition, a little nicer coin than normal, and we're pricing it less than our normal $5 Liberty that circulated, $585, 800-951-0592, $585 for a $5 fractional gold coin, less than our normal price for a circulated $5 Liberty, so it's a great way to jump in on some fractional gold. I was checking out some prices, very, very well competitively priced across the entire country on the coin. We can't just have lower prices than the entire country every single day because, sometimes there's reasons why some of these big players that sell gold and silver has a cheaper price, because you'll turn around and try to sell these XF $5 Liberties back to them in the future, and then you start to figure out why some of the big companies are a little cheaper. That's why we do a good job. You may pay $5 more on a coin on the front end, but you better believe you won't be. You deal with the big company, and hey, you're one of our guys. You'll be getting a nice price on those coins if you ever need to cash it in and fix a roof or pay the insurance on something, or you got a medical emergency, or whatever. We handle those situations for our customer just fine. 800-951-0592. And why do you want to get these $5 Liberties at $585? You determine. Listen to what this guy's going to say, and you determine whether you should be in paper or you should be in gold. Go ahead and Jack, play that.
Right into it. So everyone, I just want to show you this chart. This is the S&P 500 over the past 90 years. Now, what do people keep saying? They're saying, look, just keep on buying because it just keeps going up and up and up. And yes, why that's been true over the past 14 years since 2008. Every time we've seen a dip in the stock market, the central banks run in, they print more money, they lower interest rates, and the party keeps going. Or what some people say, they just kick the can down the road. But people, what you have to know is this bull run we've seen in the S&P 500 for the past 13 years is completely unheard of. This doesn't normally happen. And yes, while they can keep kicking the can down the road, they can't do it for eternity. Eventually they do have to face the music, and eventually they will run out of firepower to keep this bubble going. And I fear 2022 is the year the road ends. And what I see on YouTube with a lot of these people that just keep recommending you to blindly keep buying is they've only been investing during this crazy bull run that is unprecedented. Not all of them, but most of these 20-year-olds or people in their early 30s, they've never seen a significant prolonged downturn. It's easy to say buy the dip, diamond hands, when the stock market rebounds next week. But what if the stock market stays flat or doesn't rebound for a decade? Look at this, everyone. In 1968, the S&P 500 hit 853. And if we have a look here, it did not recover all the way until 1993. So that is 25 years you would have to hold just to get your gains back to what they were in 1968. But remember, we had high periods of inflation in the 70s and in the 80s. So really, it would have probably taken you in real terms another 10 years because inflation would have significantly devalued your portfolio. But you may say, look, that's just one point in history. That was just a fluke. No, it wasn't, everyone. Also, look at this, the famous time, the Great Depression, 1929. The S&P 500 hit 500, and guess what? It did not recover until 1956, 27 years later. And then look what happened. It fell back down to this level and below again in 1985. So that is literally almost 60 years you would have to wait to get your gains back to where they were. Now, I'm not trying to be all doom and gloom here or try to tell you to sell your portfolio, try to time the market, but I feel like nobody's saying that, look, we could be in a scenario where the stock market could crash and it could be possible that it may not recover for 10 or 20 years. I'm not saying it will, but all these 20-year-olds and early 30-year-olds that are saying, look, just keep on buying because it'll recover within a year, 2 years, 5 years, that may not be the case. And unfortunately, most of the stock gurus on YouTube are young. There's not many mature people. And I'm young myself, but I try to learn from people older than me and learn from people that have lived through these experiences so I don't have to make the same mistake myself. And my audience, you subscribers, a lot of my viewers are over 45, over 55, and over 65. So if you're over 55 and you're listening to these 20 or 30-year-olds that are telling you, look, just buy, and hold, it will recover within a year or 5 years, well, that may not be the case. Maybe you have to retire in 10 years. Or maybe you put money in that you couldn't afford to lose. Because I know a lot of people say, look, yeah, I can afford to lose it. But yeah, I'm talking to you, Jimmy, that keeps risking your rent every month when you're trying to day trade options or day trade cryptocurrencies. Stop doing it, Jimmy. Or you, Johnny, that still has credit card debt and hasn't got an emergency fund. Don't invest money until you pay that off and until you have your emergency fund. But going back to my message, everyone, they've been kicking the can down the road, and what they've been able to do over the past 40 years since the 80s is drop interest rates from 20% to 0. They've been able to print money like crazy. Governments have been able to take on more and more debt. But now with the debt at 30 trillion, the government's not going to be able to take on much more debt, especially with interest rates rising. Also, now we've got inflation out of control, like what happened in the 70s and 80s. So if we do enter a bear market in the stock market, unlike 2018, the Federal Reserve's not going to be able to lower interest rates and turn the money printers on again. So my point, it's time to have a good hard look at your portfolio and tell yourself, will I be willing to hold this for 20 years if it goes down? And also ask yourself, can I afford to lose this money? Because people, like I've shown you, it doesn't always just come roaring back. But
there you go, Brian. We could very likely be in one of those couple of holes that you talked about, 1968 to 1993, 25 years, 1929, 27 years later until the S&P recovered. It happens, and it's happened before twice since the central bank is in place. And he didn't just say it outright, but Michael is a gold guy, and he's like, he's basically saying, "You dude, just buy gold." Gold doesn't go down for 25 years, Brian.
No. What I'd like to see, Jason, we'll have to see if it happens. These freedom convoys, I'd like to see a freedom convoy of people getting some of their assets or some of their wealth back into gold and silver.
Exactly. 800-951-0592. Jump on the fractional gold special that we have while Joe is away. $5 liberties for $585. We'll come back, have a couple of closing words before we jump into the half-empty Cup of Joe. Brian and I will be doing that show also. Stay tuned.
Final segment, Patriot Trading News Hour with your co-host Jason and Brian. Thanks for joining us today on this Moon Day, 7th of February. Jason, I just saw something here. Looks like the 2019 Secure Act has a couple of provisions that may become more apparent this year with respect to 401k plans. Interesting how they're they're upping the limits as to what people can contribute to their 401k or put into that black hole, as I see it.
Uh-oh. That's all I have to say is uh-oh. Man, so there you go, folks. We had the gold special, the $5 liberties for $585. You just got to call us 800-951-0592. You could quite literally be looking at the last time we'll be selling these coins at these prices, because we told you early in the show about this chart that looks like the line that's descending and the line that's ascending, the higher lows. And the chart is looking for a breakout. It's looking like this month, next month, or April, a breakout in gold. And it's not going to break down. It's just not. What is happened in 2008, 2009, 2010, and so on. And gold went up to record highs. Coronavirus was the new emergency that was brought in, and gold went to record highs. And this chart is taking a little bit of an extra push in gold in 2020 when it got to its record high. But it didn't really go down that much, Brian. And, we've been in the 1800s and 1900s from 2019 or 2021 and on, and we're sitting there as the spot price, for example. And I'm telling you, ladies and gentlemen, you got to buy your gold and silver in the next couple of months. You can always buy it when it starts to go up, and that's fine. A lot of people will, but I always tried desperately in 2018, 2019, and now in 2021 and this part of 2022. I'm desperately trying to get you guys to buy it now, because you can buy it later, and it is savings, and you're not going to lose anything by buying it later. But if you want to call it a little bit of this as an investment opportunity, well, if you can get it before it starts pushing upwards, this would be the time to get it. You do that by calling.
You get just a little bit more, Jason. You get just a little bit more of that gold or silver today. Today's the gold special.
Absolutely. It's 800-951-0592. Now I'm going to get a little plug to the show that Brian and I are going to do. Now, Brian, I'm going to do a speech from a guy named Jim Mars. For you in Arizona, you have to go to 1360khnc.com and stream us in to get this content. We have a small business advertiser that's coming in. I got to be prepared for that. So to get this speech in, I may knock out a couple of commercial breaks. I'm not a huge fan of Jim Mars, but he's great. The guy understands a lot of our broken history, this wrong things we've learned. So if you want to hear a different spin on history, tune us in the next hour. And let me give you a little tease. I'm going to ask Brian this. Brian, if it's World War II times and you're making a atomic bomb to drop on Japan, and you're enriching plutonium and you test your first bomb as a plutonium bomb, do you simply take over 2 uranium bombs and drop them on Japanese? Does that make sense to you at all?
There's something missing.
Yeah, back then it wasn't easy to make these weapons. So if you're doing plutonium and you test with plutonium, and what gets dropped on Japan is uranium, something happened, didn't it, Brian?
Makes me wonder, was plutonium relatively cleaner than uranium, and there was more to the decision to use uranium, or I'm curious to find out.
Maybe somebody else made the uranium bombs. How about that one?
Ooh.
Thanks, guys. Joel will be back tomorrow. This has been the Patriot Trade News Hour.